Hey traders, quick market update and also a bit of a warning as well too. Let's get straight into it. Do not place a trade based on what you're seeing in this video today because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Hey traders, as you know that some of the biggest things that makes you a successful trader is really learning the art of trade management and really good money management techniques. I've just recorded the video walking through all the steps that's really going to help you. So click on the box above that says trade and money management and to get access to this video right now. Alright, hey traders, pretty much nothing there across the board, so I'm not really going to talk much about the actual market itself. You guys know what's happened in the markets today if you've been watching it. Pretty much a nothing day. I'm still bullish on silver and gold. It may have a little pullback. It might have a little pullback going into the short term, but long term, I'm definitely bullish. Looking on silver and gold, I definitely am waiting for. I have my monthly setup, meaning monthly says that we should head higher moving into next year. I'm waiting for my weekly and daily setup. Once that happens, I'm gonna put on another position on silver and gold, or silver, should I say? The SILJ price. But, you know, looking at the markets, pretty much nothing day across the board. You know, you look at, this is the overall markets here, guys. You've got the 4 different indexes. Dow Jones, pretty much a nothing day. The IWM, which is the Russell, it had a small little, actually, what's that? Bit of a 1% pullback. And looking on the Nasdaq, we had a pretty much a nothing day. But that's not one of the reasons why I want to do this video for you today. One thing I want to share with you guys is I want to give you a warning. A pullback is going to happen, and a big pullback. Warning, a big pullback is going to happen. And the reason why I'm putting a warning on that is because, let me go and show you this here. This here right now, what we see here, this is the obviously, this is the CNN. This is the CNN fear and greed meter, and you can see here we're at extreme greed. All right, we're at massive extreme greed. Now, here's the thing I want you to think about, guys, when it comes to extreme greed and extreme bearishness. If you look at probably one of the most accomplished, one of the most successful investors of all time, Sir John Templeton. I think that's how you pronounce his last name, Templeton. I think I'm saying that right. So, if you think about that, right? If you think about that and you think about how did he make most of his money? So I just found a photo of Sir John Templeton. I wanted to share this with you. I just went through some Google images and I want to share this with you. Sir John Templeton became a billionaire. Now, do you guys know his story? Well, his story was this. He made his money by doing this. He went and when the Great Depression, when no one wanted to be involved with stocks, when no one wanted to be involved with any stocks, what he did, he took $10,000, and this is just from memory, don't quote me on the numbers here, but this just get the theory of the story. He took $10,000 and he bought stocks that were less than $1 that he saw. He bought stocks that were less than $1 that he saw that could be extreme value, you know, moving forward for the next 5 or 10 years, right? Investing in those. So, what did he do? So he went in and he bought when everyone was extremely fearful. Why? Because he saw for the next 5 or 10 years there's going to be great booms ahead, and so that's what he did. And he went in and he bought that and stocks over the next 5 or 10 years, and he became a billionaire that way. And you know, and it's. And that's basically what he did. And then what he did, I think he went and then he went overseas somewhere. He went over somewhere else. I think it was Singapore or somewhere like that, where again, that country was doing really bad. But what did he do? He went in when everyone was extremely fearful. He went and bought stocks for long term, and then the market rose long term. He went and bought good quality stocks and brands that he knew that'd be around for a while. And then guess what? And then the market took off. That's what his strategy was. You know, and you can see it through there. Now, if you have a look at this here, you can see this is the cycle of the obviously the cycle of the emotions when it comes to, you know, when it comes to let me see if can I enlarge that? Let me see if I can do this. I'm going to see if I can just take that, and then I'm going to enlarge it here. All right, cool. There you go. So you've got the cycle of market emotions, and I want to explain this to you guys. So as you can see, that as this market rises, okay, as the Dow Jones has been rising, right now, what are we at? We're actually getting to the thrill, to the euphoria, right? This is where we're at right now. I believe potential of maximum financial risk. And as you can see, and then suddenly what happens is the market rises so much. This is great. I've made a smart investment. And then they do that, and then suddenly the market pulls back. It's okay. I'm investing for the long-term denial. And then so you can see that through there. And then the fears and desperation, and then panic, and then capitulation. Which is, it's a really, I want to give up and sell, you know, and then suddenly this is a potential. And as you can see, it's around about, it's through here, it's through these levels through here that obviously Sir John Templeton was buying when he was buying stocks. Now, the reason why I bring that into your thinking or your thoughts and stuff like that is because right now it's also the opposite. So when people are extremely greedy, that's generally when the market is prone to have a pullback. So right now we're at extreme greed, and you can see here, looking at these put and call options, during the last 5 trading days, volume in the put options has lagged. Volume in the call options has been up by 43.26% as investors make bullish bets in their portfolios. This is among the lowest levels of put buying since during the last 2 years, indicating extreme greed on the part of investors. Now, this is investors, okay? This is investors, and I also heard that there's also record brokering accounts being opened up right now as well too. The S&P is 4.7% above its 125-day moving average. This is further above the average that it has been typical during the last 2 years. And a rapid increase like this obviously indicates extreme greed. So guys, what I'm saying here is, not only does my chart say that, and as you guys know, I've been saying for the last probably 2 weeks now, that this, as the market extends up, the greater it extends the market, the faster this pullback is going to be, the faster this pullback is going to happen. And then we go down to the junk bonds and the safe havens and so on and so forth. You know, hitting market volatility, you know, and even when the things like, you know, the VIX right now is down at about 12. It's actually a bit lower, actually a bit higher than that today, I think it is. The VIX right now is, yeah, basically the same price there. But if you have a look at this here, you can see fear and greed over time. So you've got 2014, 2015, and 2016. You can see right now what's happening right now. We're getting right back up to the extreme greed, and this is where you know, if you're a betting man, you better, you know that we have a really good chance of the market reversing, right? Because that's what the market does. It does the opposite to what you think. It's like, okay, this market's rising, okay then. So, you know, so you look at that. So okay, cool. Well, I looked at that. I said, okay, that alone. One, my charts are saying, and if I bring up my actual charts here, and I bring up, say, the Dow Jones, I've actually said for a long time, guys, and I said for the last week, that I'm expecting a pullback. Now, I also said, guys, I don't know when that pullback's going to happen, but this market has just shot up so hard and so fast and so quick that, yeah, now this market's extended even more. It may get to 20,000. I don't know. But what I do know is when the pullback happens, and I believe it's going to happen probably maybe in this week, we're going to get a hard and fast snapback. It's just going to happen. You can see it. It's in the books. So let's actually go back to here. So I looked at that, and then what I did is, okay, I said, cool. So I went back and I had a look at, what's that ad doing there? I went back and I had a look at this article here, and it says the Dow is the most overbought. Is the most overbought in over 20 years, and option traders have never been more bullish. Let me show you this here, all right? So as you can see here, what do we have here? This is the Dow Jones. Oh, damn. What's going on here? Oh, there we go. Cool. I think I got a virus on my computer. I think that's I think that's what's happening right now. Anyway, so, and as you can see, the relative strength has been bigger than it ever has been, more overvalued. If I scroll down here and I show you this, you can see this chart through here. This chart through here has been, you can see that it, having risen 21 for the last 25 days, the Dow is the most overbought since 1996. 1996. With the Dow Jones basically one good ramp away, it is perhaps worth noting that the index, dominating the Goldman Sachs performance, has been overbought for 22 straight days. And as you can see, you can see exactly what's happening with the Goldman Sachs and stuff like that. But this is the one thing I really want to share with you guys. This chart here is the big chart that I want to share with you here. Meanwhile, option traders, I'll take a screenshot of this one here. Right, let me blow this up there. All right, cool. So it says here, meanwhile, option traders have never been more bullish on the S&P 500. And then you can see here, this is the the option traders here. And look where we are right now. This is where we are right now, guys. And it's like, this is, if that there is not a sign, if that there, guys, is not a sign that, you know, the market works in reverses, right? It completely reverses. Meaning, like, you Sir John Templeton, what did he do? He buys when the market's extremely fearful, when people are really extremely fearful. And then when people are extremely greedy, that's when you need to take it off, right? So looking at that, you see, okay, cool. Now, let me go show you another article here I saw on Zero Hedge. And let's go through here. Where was that? It was this article here, I think I was reading. And as you scroll down through here, just forget all this here. But I want to share this basically this chart here with you. Let me see if I can. I'll see if I can. Yeah, take that. I want to talk this about the positioning here. And as you can see here, what we have on this chart here, guys, is we have the white line is obviously leverage funds. You have the green line, which is the real money, which is basically the market itself. You know, then this little sort of orangey line is the dealers, and this sort of purple line is the central banks as well too. And you can see, guys, that basically the smart money, what is the smart money doing right now? The smart money right now is doing what? Right here, look how short that is right now. Look out, you know, there basically you can see how bearish this is, basically a net short position. And right up here, right now, you can see what's happening right now. So 5-year positioning show record levels funds short, which is the white line. So all this, guys, is I'm bringing this to you. I'm bringing you evidence to show you that this here right now, this Dow Jones Industrial Average right now, we are about to get a hard and fast snapback. Warning, big pullback is about to happen. I'm not calling for a crash, and maybe it is a crash. I don't know. Something is lurking behind the scenes. This is a pump and dump situation, and the more I look at this, the more I see this, the more I get more evidence. Not only is the chart telling me, but I'm seeing the call options. I'm seeing, you know, the smart money. I'm seeing the fear and greed meter. All these things line up to, guys, to pull back. And the reason I'm doing this video is, if you guys are bullish right now, get the hell out of Dodge. If that's if that's what they say, get the hell out of the market, right? I wouldn't be shorting it here. I wouldn't be buying it here. If I was a betting man, I'd be shorting it here. Why? Because you do the exact opposite to what most people do in the markets. And that's how you get the exact opposite results. Sir John Templeton, I'll go back to him again. What did he do? When most people are scared out of their minds, you know, in depression mode, in fearful mode, and no one wanted to get involved with stocks, what did he do? He went and bought stocks, and the next 5 or 10 years it rose. Right now, what's happening? Everything's on the extreme greed, and now I believe we're likely to get a pretty big snapback. And so, like, I believe, like, right now on the Dow Jones, you know, if we have like, Like right now, you can see the Dow Jones has rose through there. So a 50% pullback is 18, probably even down to that. So, and I believe, call me crazy, but I believe when the pullback happens, and it may be this week after the FOMC announcement, I believe the market will actually get down to there. And just be prepared, guys. Be prepared for some big selling that's going to come along the way, because it's about to happen. And there's my AVG virus thing popping up. See, it's just about to happen, guys. So, warning, guys, a big pullback is about to hit the markets. Hey, thanks for watching. If you'd like to get more free education about trading, then click on the box that says free trading course. This is a free trading course. It goes for around 12 hours long. It's about 12 videos long. Covers everything from chart reading, mindset, trading systems, money management, trade management, everything you need to get yourself ahead in the markets. And if you'd like to get my help personally, then click on the box that says get John's help, and you'll be able to see how you can get my help personally. Don't forget to like, comment, and subscribe on the video. And remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.